Hey everybody, hey traders, happy Tuesday. We had day one of Powell's testimonies today, day two tomorrow morning. Didn't really out of the ordinary. We have CPI data on Wednesday, PPI data on Thursday. So markets maybe get a little bit more exciting here in the next 24 hours or so. I'm actually just managing a couple of trades. This was an iron condor that I took, pulled in $4.55 and closing it right now for hopefully 340 to 345. 345. So just made $1.10 on that trade. I got a couple more here for the March 14th expiration. So the 5610 by 5590, 6290 by 6310, closing 345. Not too shabby. $1.10 per contract. I will take it. March 14th right here. It's a little bit faster than yesterday when I was going through some trades. Same thing here for 345. Very nice. March 14th, right there and right there, closing 345. Perfect. There it is, right there. All righty, and this one should be none and none. Okay, so that is 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 accounts at $110. Just grabbing a quick profit, so not too shabby. 110 times 10 accounts. Oops, 110 times 100. There, 10 accounts. Grab a quick $1,100. So some profit protection there. I'm also doing some cleanups on SPX positions and trying to get a lot of these zeroed out, which is good. So a lot of profits, a lot of partials, have some income traps, all this type of stuff. I've been trading for the last like 30 to 45 days and brought back a nice chunk of buying power. So let me go to positions. A lot of zeros today. If you can see it on my screen, lots of zeros, meaning I'm closing out these trades for winners. I still have some trades in, but tomorrow this is going to look a lot better. Ended up adding in about probably about $20,000 in buying power on this account, and then probably doubling, triple that for other accounts. So buy power is good. This one gets some extra buying power back in all these accounts. Not too bad. All right, so markets coming into tomorrow, we're at 60.72 on the SPX. So happy Tuesday, everybody. Pretty active day overall. Had a new service start this week. Newsbreakers. We ended up taking a lot of trades today. Trade is running on Shopify, DoorDash, Upstart, AppLovin, Lyft, Roku, Twilio, Trade Desk. All new trades for today. Out for a couple of weeks. Trying to see what earnings and some major news gives me, and also looking at some volatility expansions on some of these plays. So can we get a volatility move on Trade Desk to get up to the highs at 141? Can we get a volatility move back down to previous support resistance around 105? So hopefully there's going to be like a $15 to $20 move. I'm looking for about a $16 to $17 move. I paid I think $10 for a trade. So as long as I can get at least a $10 move and make some profit on that, that would be pretty good. But busy week, busy session. What else? Sector performance year to date. Let's do a refresh. This should probably close after market today. I mentioned this one of my morning sessions. Give me, well, sorry, I might wrap up today's class a little bit early. I talked about this morning. Year to date performance from the S&P versus the, what typical sectors lead the way during a bull market, and it's not this. So energy, financials, healthcare, industrials, materials, utilities, doing pretty well this year. This doesn't really look good for a full-on broad bull market. Now we are broadening out, having a lack of movement, lack of profits, lack of bullish direction on some of your big tech plays. Mag 7's been down and it's sideways and it's stalling. If we're seeing a lackluster movement in Mag 7, then you're going to see a lackluster movement most likely in indexes that are market cap weighted like your SPY and QQQ. But energy is doing okay. Let's check some sectors actually. We have news tomorrow morning. I talked about this yesterday in session. Let's go to the Bloomberg calendar. Did this actually give me the forecast that I wanted tomorrow morning at 8:30? Okay, so we've got core year over year. So last time we had a big reaction on CPI, the market ended up finding all-time highs in the S&P. Market was all excited to buy, showed that inflation was trending better. This is the previous print for the core CPI, and it's forecasted to print 3.1 tomorrow morning. I'm not saying that's good or bad. Obviously, that's a long ways away from 2%, which is what the Fed keeps talking about. The month over month, year over year, 2.9, 2.9. We'll see what that print is. This is tomorrow morning. So core CPI, hopefully going to go a little bit lower on the core side. Month over month might be sticky again. Year over year might stay the same. And then going into Thursday's news, that's also 8:30 in the morning. This one doesn't give me. Here we go. So I'm looking at the core PPI 3.5. There's no forecast. I think I found this in my FX book calendar yesterday. So let's get a little love going from the old Telegram channel. Over the next 48 hours. Okay, so let's go to this week. Time zone is fine. Calendar. I just want to see Wednesday, Thursday. There. Okay, so make sure this is the right time zone. Yep. Wednesday, 8:30 a.m. Here we go. Here's all your high impact news, previous consensus. This is actually a slightly better look. I like this a lot. We also have 7 a.m. news on the 30-year mortgage rate, which will be interesting to see how that transpires tomorrow. If it gets any better, I would hope that it does. It's going to be mostly tracking the 10-year Treasury yield. As far as if that moves down or up, then we'll see some adjustments in maybe the mortgage, but otherwise it's going to be sticky. Anyone closing on new houses like myself in a couple of months, probably not going to be pleased with the interest rates, but them's the deals. So just debating on how much money to put down, make the payments, reasonable, what I think is reasonable, and also, try to not have PMI. Anyway, here's the Thursday news. So inflation rate, I'm more interested in the core inflation. Okay, and then we have where's my core inflation CPI January? This is for the 12th, which is tomorrow. So does this show? Yeah, 2.9, 2.9, and then core inflation rate. Previous was 3.2, forecasted 3.1. So market's looking at a decrease in core and equals in year over year, and then month over month to be a slight increase, and then month over month between core would be a slight decrease. So core being a slight increase month to month, the inflation rate month over month would be a slight decrease. But I think these are the two that you really want to watch for. Are we getting an improvement in headline inflation? So if the year-over-year CPI comes in, 2.9, okay, fine. If it comes in 2.8, market might get excited about that. If our core inflation year-over-year comes in 3.1 to 3% or less than 3%, I think the market might really get excited about that. So again, we are lacking some drivers in the market, right? I mean, everyone's been wondering. I mean, look at this week so far. This week has done absolutely nothing, And granted, like Wednesday, Thursday, the market's going to get shaken loose. There's going to be some volatility ahead, whether it's going, up or down. One thing I'd be looking to trade tomorrow morning would be futures. So this trade for the morning has basically done nothing. Here's my trade for the morning. Basically did nothing. So we pivoted around the 9 o'clock level. There's a small breakout after 9:30. That was pretty much it. But it's been a pretty quiet day overall. Tomorrow should be getting things rocking and rolling. 8:30 a.m. is the news, so we've got an hour of futures trading to see where things are at. I'm going to look for a big candle one way or the other. Let's just go back and get a previous lesson here. This was the 15-minute candle during CPI back in, is that right? Or maybe it's earlier than that. When the heck was when was our inflation? This would have been back in, okay, January 14th. There we go. There we go, right here. So this was the CPI news. That was CPI news that continued to push all day. A little pullback, another push. I mean, just kept grinding, and we got all the way to all-time highs, and then we faded, right? Then we had DeepSeek, and then we fought back, and then we had tariffs, and we fought back, then we had tariffs again, and we're sitting here like not at new lows, not at new highs, right in the middle. So I do think that there's at least enough of a catalyst around inflation this week. We get the market moving. I just don't really know what direction it wants to move. Been very sideways. Could I see something like this? Sure. If we break that structure, if CPI gaps lower, if we gap lower and we see like a bear flag there, then I think there's certainly rooms to come back down to this, these tariff lows and maybe make some fresh lows. If the market gets excited, then we have a gap higher and we might be talking about all-time highs all over again. Okay, so I am not sure, but this market's hopefully going to be moving one way or the other. I will continue to look at all my little income trades. And that's it. Like, just keep it pretty darn simple. So let's see. Key levels. The bulls look like they have the upper hand a little bit. I wouldn't say this is like screaming to the upside right now. It certainly was like a slow grind. S&P a little bit more biased to the upside. So we're getting a nice little buildup of levels around 610. My one concern is that this is not a big enough level for a liquidity hunt. And I would think that the market makers may be able to defend that trade. So if we come into like 607, 608, we don't necessarily get above 610. We don't necessarily get below 600. So in between, this market might be very choppy. A break above 610 could blow it out. A break below 600 could blow it out. But until then, I'd say we're in between. Okay. All right. So levels there on the SPY. Key levels on the NASDAQ. We did end up touching one of my levels today at 530. We have not made a convincing break above it. I don't really see any outlier levels. It's pretty evenly distributed. Look, a break above 530. We can get to all-time. I don't know if it's all-time highs. It's got to be close. I think high 530s. It's like 537, 539. Let's go to the Qs here. I think it's like 538. Yep, 539 and change is the all-time highs. So if we break above this chop, this would be a big deal. If we can close above this level, I think the Qs can come back and poke the all-time highs. It may not have much follow-through, but we could still get a move of 528 to 538. That's still a $10 move. Let me check one thing here on a potential volatility squeeze. So maybe a vol squeeze on SPX coming in the next 30 to 45 days, which makes me, I'm considering pricing some things out through like probably April, as long as I don't have to pay for a bunch of it. Like I want it to be fair. But I think we could have a vol move one way or the other by April or May. So NASDAQ, let me take a quick peek at NASDAQ. This one's been coiling a lot longer. I actually like this one a bit more. The only issue is, this is about a $10 upside. And if I can't get that trade for cheap, then I don't want to take it because I feel like the downside is almost a better trade. Like saying this, if price comes up here and pokes the highs and then fades hard or falls hard, there's a lot more downside potential, from going from 540 down to 500. I'd much rather be a part of that trade if we have like a vol play. but there's a lot of tightness in the NASDAQ right now. And either this is tightness that's going to lead to a breakout, or this is tightness that's going to lead to some type of, fall. But I just expect price to go one way or the other. I'm just trying to figure out how to trade it. So we're trading right now at 530. If this was, I'd be more keen on taking this if it was in the middle. We got 540 highs and 500 lows, and we're trading at 520. I look and see if I could price out a trade that goes both directions, and look at a trade out to April or May and see if I can get it for, if I'm looking at about a $20 move, if I could pay, let's say like $10 to $12, I'd be willing to take that trade for some partial profit. Okay. But right now, price still remains pretty elevated, pretty supported. I can go, let me put on some other indicators here. Let me go exponential 1, 2, 3, 4. So I can go 8, 21. Yeah, let me make these some fibs. So I'm going to go 8 and 21 and 34 I'll do a 100. Actually, I'll do a 50. 50, 100, and a 144. Okay. So just for some dynamic support, which I think we have, but any type of like downward movement, I'm liking this idea of like closing below, closing above, and then getting long to revisit the highs. This is just what I'm talking about. This is a big volatility buildup. So if we explode higher and fade, or we explode lower and rip, maybe the best trade is not necessarily to call this expansion, but rather be ready to jump in if I see this thing starting to break one way or the other. Then I look for like a vol play, maybe. But as it starts to move, it'd be a little bit better if I was neutral around this 520 handle. So let me price something out here. Could we hit all-time highs? 540. Let's see what this price is out to be. So let's go QQQ. And let me go out to April's not a bad expiration. It's out about 65 days. We've got $5 strikes, which I don't love, but if I actually hate that trade. Just going long is going to be a $27 move, and the expected move is $30. So you're paying pretty much all of that expected move. Now, if I were to go from 525 to, let's say, 500, and from a 535 to 560, I pay $16 for what is hopefully going to be, a $30 move, one way or the other. Either we go back down to 500 or we go to all-time highs at 5. I need $20 a movement. I don't really like that trade. Son of a bee. I think I'll wait. It is really tempting. I'm just looking at this. If we go, higher with momentum, then I'm looking to see if we can eclipse these highs. The problem with that trade is, number one, I don't have any downside protection. Let's go exponential again. This is going to be a 200. Okay. So I think the better trade is just what I've been doing, honestly. Let me see what I can get here for the QQQ. The IV rank is so crappy. Let me see if I get something juicy on the NDX. Could I price in something on NDX down in like the 19.3 area, 19.3 to 1900? Let's try that. NDX. So if I go out, Let's look at end of March. End of March. Let's go to like a 10 delta. These are all 25 wide. So if I do like the 19.5 by 19.475, that's a $2,500. I mean, that's pretty crazy, right? I could for $1.50, I can make 25 points. So that's a 23.50 profit trap. Now the trick here is 19.3. Oh my gosh. I mean, it's a 96% chance to profit. There's only risk below 19.3. 19.3 is, well, it's gettable. 19.3 would be the NASDAQ would have to drop around 11.25% in the next 48 days. So there is risk in the trade, which I don't love. It's about a 1% risk if I take this trade, but the question is, can I get filled on this trade? The nice thing is there's a $25 profit trap, which I'm totally all about. Can I buffer this just a little bit? Get $1 there, get $1 there, 85 cents, get 95 cents. So if I can pull $1 out of this trade, I'm okay with it. I do have a 23, basically a $25 profit trap, which cost me $1.50, so I get $2,300 on that profit trap. I don't think that's a bad play. There's still risk in the trade, so I'm not trying to minimize the risk here. Probability of profit's pretty high, 96%. We'd have to have like an 11.5% crash in order for this to be a threat. There's no assignment risk because I'm trading index. Sorry, a little under the weather today. So do I like this trade? I would take this trade if I can get filled at over $1. So the question is, could I make this a little bit cheaper? Maybe. So there's still a $25 profit trap. Where's that 200 moving average? Right around, I mean, it's the moving average is like 20,000. A couple ways to take this trade. All right, let me see what I can do here. If I get filled for like $1.10, $1.20, I'm going to take the trade. So it ties up $2,300, which I'm not stoked about the buying power, but I'm okay with this being defined risk and still carving out some profit in. I can always look at the halfway point. So from 48 days out, if I protect this at like 24 days or 21 days, price goes a little bit higher, this profit gets even easier. So if I go from $1.15 down to 15 cents or 20 cents, I can just take the profit. So let me see if I can get this trade in for like $1.05, $1.10. Let me try this trade. Hopefully it gets filled. So $1.15, I'll try it. Not filling at $1.15. I'm not going to take less than $1. I really don't want to take less than $1.05. So for the fees and everything, at least I can pull in $1. So $1.10. Come on now. All right, I just got filled for $1.10. So I'm going to take that trade. Let's get after it. Okay. And trade is fine, 7634. Okay, a few more accounts here. Okay. All right, $1.10 credit got filled. Let me throw this in the tracker. So this is NDX. 3/31 expiration, and a 19425, 19425 put. 19400 put. That's my profit trap. 19300 put, and 19250 put. $1.10 credit. So we're looking at about a 95% chance of profit here. 2390 buy power reduction. It's a 23 profit trap. All right. So that trade is in. I'm doing the March 31st expiration. Yep. So March 31st out 48 days. And so I'll look at this trade about the halfway point. If we get through from 48 days down to, let's say, 24 days, down to 21 days or 20 days, then hopefully this $1.10 is already trading for, if it's 40 cents, 30 cents, 20 cents, then I'll probably just take the profit and move on. Okay, so not too bad. Take that trade. So my threat is 19,300. So the nice part is, I've got a profit trap. There's a profit trap here. There's where my trade is threatened. If we go higher, this is easy profit. If we come back down, that's fine. If we come back down a decent amount, that's fine. If we come back down a lot, that's fine. Again, 11.5% is my buffer to make some income on this trade. So if the market keeps grinding higher, then this trade is easy peasy. If the market has a reaction, let's say an adverse reaction to either resistance at the all-time highs and the market stays range bound, then I would probably line up the same trade. If we end up going back down to these lows, then I'm probably putting the same trade on, but just at a much lower strike price. But if we go down first, then we just kind of stay in this environment here. Just a lot of indecision. So, there's a lot of ways to draw this up. There's lots of dynamic support. I can see buyers coming back in. I can see the S&P, tagging those highs where it's just sitting like a 1 or 2% off the all-time highs. Same thing here in the NASDAQ. Do we tap those highs? Do we get higher? Maybe. Do we hit and fade? Maybe. I don't know. Right? But a lot of good stuff has been priced in. Earnings have not, been like crazy surprises. They've been pretty much within expected moves, even though guidance has been pretty decent. Anyone mentioning AI that's been on a big increase the last, this month has been positive earnings to say like, hey, we're in the AI space too. Why? Because it's gaining traction and drawing investor flows. So anyway, all right, that trade is in for NDX. So a little profit trap activity from 19,425. Well, I don't have to draw this. I've got it in my charts. All right, that's NDX. So a little income trade. What I will do is I'm going to set a take profit here at 55 cents. NDX, 1, 2, 3, 4. I'm going to go ahead and take profit here at 55 cents and just put in a take profit. So manage it there. Same thing on these trades. So I'd like the profit. I'll let these run on the larger accounts. All right. That's fine. What else do we have? Let's take a look top down. NASDAQ is red today. S&P is barely positive. Dow is slightly higher. Dow's also sitting here wondering, like, can we break all-time highs? We haven't done it yet, right? Haven't done it yet, but can we? We'll find out. Is this also rotation? Remember, if the Dow goes higher and it does so by outperforming the SPY or even outperforming the NASDAQ, This is the rotation that everyone was ready for. Rotating into price weighted, rotating out of Mag 7 with high concentration, rotating even into small caps. Small caps are down today, but the Dow's been performing pretty well. Okay. Trades through the analysis tab. What do you mean? As in what? You want me to show you what it looks like here? I don't really run the analysis tab on Tasty because I have so many trades running that I'd rather use my other software. But that's what the trade looks like. So it's way out. So you can see it, right? So I pulled the trade in for $1 credit. This is live price. Change it out here. This is live price. Okay, so price has to go all the way down to 19,400, and there's a profit trap. And then anything below 19,300, I take on some risk. So, that's, again, I've got about an 11% buffer, like 11 to 12% buffer before I have to deal with any trouble, which right now I'm okay with. So that's what it looks like. Okay, profit trap is pretty decent though. That's wishful thinking. I don't really take the trade with the intention of getting the profit trap. That's more like it'd be awesome if I did it, but I also give myself that wide margin for error. Okay. All right. What else is going on today? Russell still sideways and choppy. This is another one that, like IWM, I don't love it necessarily, but I just think there's a resiliency with this high right here. We've been making higher highs and higher lows. I just wonder if we get back to these highs and maybe have the Russell just outperforms. Like if IWM is outperforming the SPY this year, why can't we get to all-time highs again? The only issue that I have is that for 2,000 stocks here with small caps, like 70% of them don't make money. So I'd rather go a little bit more concentrated into like the IWY, which is a top 200 growth, and IWX, which is a top 200 value. So I'd rather take, the top echelon of stocks in the Russell and position that way. So I like this trade, but right now I'm essentially sitting with ownership around $200 with a call at 225, and it hasn't been called away yet, but it's got to be coming up here in the next maybe 30 to 60 days. IWM, March 21st. So 38 days out, I've got a covered call. And right now I'm up around $3,200. So, I like it. I want to see some additional profit. I have a total of 400 shares, roughly around $3,200 each. So 3,200, it's almost 13 grand on the Russell. It's not bad. If price just stays where it is, if price goes higher, that's fine. I don't think I'm going to chase it. Sorry. This little cold kicked in yesterday, and just trying to keep my voice down before I lose it. All right, where are we at for the rest of the day? Qs are fading a little bit in this final hour. S&P just fading a little bit right in between all the levels that I was watching today. So 610, 600. It's really a coin toss going into inflation news this week. So Wednesday, Thursday, CPI, PPI combo. If it's gonna get the markets to run one way or the other, I would just be watching the futures market tomorrow morning. Okay. Growth solid, supported by robust consumer spending. Well, you can thank everyone that's living on credit card debt right now. So we will see. Look, the all-time highs are right there. I think people would be a little bit more excited, but the important thing is with upside, we have to not only get there, but we have to close above it. My biggest obstacle right now, just looking at the markets, is that if we go to the highs, that we don't sustain the close above it. Like we close above and then we have an indecision candle and then it gives it all back, or we close above and then we reject all that price action and then we fall from it. Like this, I could just see a bull trap all day on this thing. So I would prefer, right? I would prefer that we actually have a pullback or dip first. And I don't know if this is going to happen. I think there's such a tight line right now between like what happens, how vocal does the market get, how scared does the market get if we have like a 5% drop, right? What happens if we have an 8 to 10% drop? Everyone's going to freak the fudge out. And I would say, to me, that is probably the best buying opportunity of the year. Would be time this move, we close back above, and then we get back to these highs again. That to me is a much better trade to time and actually use some of my cash that's been sitting on the sidelines. That is really what I'm being the most patient for this year. And I might literally wait on it all freaking year. But this environment is not getting me to really do anything directional. So I'm not. I'm not necessarily calling the top, so I'm not doing tons and tons of iron condors or strangles and stuff like that. I've had a couple, but that trade I just took on NDX, I'm doing something similar up here. I just took a trade today off. I did $1.05 and closed it out for 15 cents. And I had another trade in for, I think it was in like for 55 cents and closed it out for 10 cents. So I'm just doing like little stabs, like high percentage moves, and just taking some income, and it adds up. So anyway, we'll see. But this market has slowed down quite a bit. There could be some things to get it rocking and rolling. I know we're in the heat of earnings season right now. The Fed isn't really going to do anything. So the Fed is kind of, I mean, everybody knows the Fed's playbook, and they're looking to cut rates in June. I don't think that's really changed much. So what am I looking for? CME watch tool. I mean, so March, no action. May, no action. June, it's, again, this is actually higher for June to have a pause, surprisingly. This shows a pause in June. Now, probabilities, looks now they pushed it. So this, again, changed from last week. If you remember being in my sessions last week, we took a snapshot on the, I think, 7th and 8th. And now the market's pushing back into July for maybe that first cut. And even that is not super high probability. So we pause, maybe a cut. It's a slim margin to cut in July. And then by September, it's looking like, okay, well, if they don't cut in July, then they're likely cutting in September, at least how it stands right now. But then that's it. So the market's now looking at maybe one cut for the year instead of two. And it just gets really deceiving, like in 2026. Will they cut again? Will they not? I mean, this is all going to change. But that has been a big question mark of, how monetary policy is going to adjust. Is the Fed truly going to be draining liquidity out of the markets? Can the market make all-time highs with less accommodation, with a less dovish policy, with a hawkish pause? Essentially, is what the Fed is right now for the U.S. Dollar index hasn't really done anything, right? Still messy here on the dollar index. I think a good spot for the equity markets to go higher would be if the dollar breaks this trend line. So we have some resistance here. If the dollar, I mean, this does not look like a good pattern either. This actually looks like it's more bullish than it is bearish. However, if the dollar can break here, break and flag, then I could see us going back to 106 or 105.50. I've called those levels out for a while. So I'll watch for that. If the dollar gets weaker, then I'll be watching the U.S. 10-year yield to go with it. Hopefully that is the case to watch them move together. So the U.S. 10-year, this is not a good thing though. Okay, this is not good. Anytime I see this thing going higher, it's not good. Let's go to Trueflation. See if this is jumping up at all. Nope, it's going lower. What the fudge, bond market? Bond yields going up. It's really annoying. So again, 4.5, not good. 4.5 to 5, not good. You can look at any macro outlook on U.S. 10-year yields compared to the overall markets, compared to the multiples that we're at, and you can see that this is basically a stop sign. So this would be your stop sign. Okay, there's your I almost had it. There's your octagon. This is your stop sign for growth. 4.5 to 5%. Greater than 5, definitely no good. But if we're just oscillating in here, like that's not good to see any type of growth. Everything when it comes to, think about how companies for the last 20 years have basically grown on cheap money. If Amazon didn't have cheap money, it would never be Amazon. So just saying, like it's just going to be a different environment. 2017, by the way, I don't know if anybody remembers this. 2017 still was an outlier year that every single month in the S&P was green. Every single month. It's never happened in the history of the market, okay? But it wasn't fast. So it was, if you look at the 12-month chart here, let's go back to the SPX. Okay, look at 2017. 2017. Like it doesn't look like this awesome month. We basically went from 2250 to 26. It was up about 400 points. Okay? That 400 points happened every single month. So it was just this slow, crazy grind. And then we had tons of volatility in 2018 with the big broadening pattern. And we went down and then back up and then down again and then back up again. Then we had a drift up to melt up into COVID. We crashed during COVID, ripped all the way back up here. But interestingly enough, on the 1-year chart, can you see that most of the time this market's going to be green? Right? So anyone using like the rule of 7 or the rule of 11 or looking at how many candles in a row the market can go with. Look, we had a pretty crazy streak. 2000, what is this? 95, 6, 7, 8, 9. What a run that was. Wow. What a run that was. And then the market still found a way to pull back. That is basically a lost decade, if you ask me. Right? Had this huge run in the 90s. Everything was fantastic. And then from a dot-com bust to a great financial crisis. But once we came out of that, off we go. And just another, this is what's scary. It's like, this seems like a lot of volatility. And it's like, that's child's play compared to what we did since the great financial crisis. So, and there's a lot of people that are arguing that the only reason that assets are this high is because the dollar's been debased. Makes sense. Or inflation's been that persistent. Makes sense. But it's like, if you're not investing, you are losing money. It's that simple. And it sucks. But there is the, TINA is the acronym for there is no alternative. And that alternative is investing in some capacity, whether it is in the indexes or ETFs, or it's in bonds with a 60-40 portfolio, or it's in stocks and in gold, or it's some allocation with equities and bonds and Bitcoin and gold, whatever you want to dice it up to be. Not investing is basically just losing to the hidden inflation that's always going to be there. And now it's just more front and center because it's been 4 to 4.5% over the last 4 years, and everybody's feeling it. Did Powell say anything worth? No, his comments were very consistent today. You can look at any highlights. Where's my financial juice here? Stocks fell, bond yields rose. Traders keeping a close eye on Jerome Powell's testimony before Congress. He has day 2 tomorrow. What he basically said is he just reiterated this. They don't need to be in a hurry to adjust policy. Hold rates steady for some time. It's not clear. You can see the markets shifted a little bit to that July cut now instead of June. Everything else was pretty straightforward. So, yeah, nothing really surprising on Powell's side. Okay, real quick, let me see something here. We're at 67. Could I go 20 wide? Let me see if I can get this trade. There's only 13 minutes left, but I'm just curious if I can get this trade to settle. It's tight movement here. I need this price to stay really, really tight. Let me see 1 second. I should have taken this trade around 2 p.m., but I'm just curious on pricing it in here for the last 13 minutes. I do have to run at the top of the hour. I've got another webinar at 4 p.m., which you're all welcome to join. We had a really active session today. If anybody is, by the way, jumping into my 4 o'clock webinar, this Newsbreaker service has got off the ground with a fiery start. We got really active today. There's a bunch of trades in. These are all active for the week. Now, some of these have plays in for this week, and I'm looking out towards the end of the month. I'm getting through the monthly expiration, getting through some of the triple witching, get some order flows, looking for volatility expansions. But we took, I think there's 7 or 8 trades that I took today. So that webinar is at 4 p.m. These alerts are still valid into tomorrow's trading day. Okay, let me have a quick peek right here. Question is can we stay around 65, or are we going to go somewhere in the final, 10 minutes? So let me go to SPX. Today's expiration, we're trading at 65. So if I go 65, call, put, let's go 30 wide, and 65 to 95, 30 wide. Let's take a look at this one. There. Okay. I'm going to see in these last 10 minutes if price will stay, if it will stay between this level and this level for $5. There. So now, and this is difficult. Like the best time to really take a trade like this is typically after 2 p.m. and trying to be out of this trade by like 3:30, 3:45. I don't like to hold this all the way, even though it does cash settle. I don't like to hold this all the way because it is just crazy amounts of sensitivity to these options. So if this goes from $5 down to a couple of bucks, that's good. Like I got $5 max profit in here. Okay, so max profit's going to be around like 500 bucks. Over the next 10 minutes, this can quickly become, look, oh, what? And just like that, look at that. So now I'm upside down about $1. Son of a biscuit. All right, come on. I think 60, 65 would be awesome. All right, I'll keep an eye on that one. What else? Dash. Yep, I'll be watching Shopify and Dash, Upstart, AppLovin, Twilio. I think Palo Alto. When did that have earnings? Which one? Palo Alto? PANW. This has earnings this week. Let me check on this one, PANW. How sensitive is this one to earnings? 3.9. I didn't make this. Didn't make it. Let's price this bad boy out. So average move around 12%. Seems pretty accurate. So 12% times 196.15, $23. Okay, so we're looking at about a $23 move. How often do we at least get to 12%? Let's find out. %. Nope. 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 Gets there. Does not get there. Does get there. Barely gets there. Gets there. Does not get there. Gets there day 8. Gets there day 3. Day 13, that one sucks. I'm going to cancel that one. Okay. So, I mean, mostly it does. It's not crazy awesome, but we have 1, 2, 3, 4, 5, 6, 7, 8 out of 8. Well, I guess it's 50-50. No, that's not worth taking the trade. If I look at the, let's look at the volatility expansion here. Let's go to PANW. We already had, yeah, this isn't a trade. So we already had a nice little expansion play. That would have been back here when this thing was loaded up, ready to rip. That took around a month. So that chop took around a month, dropped really nicely down to the 200. Good buying opportunity. So just watching for that to build up. There's no contraction, right? There's no buildup. Okay. All right. Crazy sensitive option prices here. Could I settle in for a couple $100? Maybe. I can't believe there's that much credit still left in this for 7 minutes of trading. James, I see your comment there. You say you have a few test trades basically sizing into positions but starting small. What would be the point you cancel them because of all of the trade reverses? What assets what are you talking about? I mean, I start small with a lot of things, but Forex trades, I start small. If I'm looking like the positions aren't getting filled, then I'll, cancel them. Or, I mean, I'm pretty patient on even finding the trade in the first place. So, example, here's just one that comes to mind. All right, euro dollar. Here's an example. So I think that the euro dollar, if it comes down to parity or lower, I'm going to be a buyer. So from 1.00 down to this lower on 96, I will be scaling in small. Okay, now how small? I'll buy some at parity. I'll probably buy at 98. I'll buy some at 96. Those are going to be 3 very small test trades. Okay, so how much exposure would I have in those test trades? That would add up to a drawdown of maybe 1 to 2%, like very, very small trade size. Okay, on those 3 trades, if I then get a trend line break, then I'll start stacking orders to the upside and trying to trade it back to a reasonable level. So if I build in here, my profit target is going to be 105. So I'll stack up a bunch of orders this way. I'll wait to recognize some type of price pattern, and then I'll measure out some type of 3-wave move or maybe some type of symmetry trade. If I'm dead wrong, then here's what I do. If I'm dead wrong and price just keeps bombing to the downside, then I will then stagger myself out or tier out. So I'll close one for a loss and then add back in, right? And if it goes further against me, I'll tier out on a second loss and then I'll stack back in. And those losses, probably about 500 pips would be like my tolerance on a currency like this. I mean, I'd let this thing lose 500 pips, but if I build up, I mean, we're talking about thousands of pips of upside. So I can eat the losses, build back in. So worst case scenario is I just stay with the trade. But in currencies, I mean, this is why I'm super patient on higher time frames, is these levels will hold. Usually like these levels hold and they're meaningful. Now, there might be some market, games, and they might test the lows, they might flash below them, who knows? But that's also why I trade small. I think you got to trade small. That makes sense? Yeah. So that's pretty much the style. I mean, it's not easy, and you got to be really patient, and you got to be, look, you got to kind of numb yourself to the dollars. I mean, I really don't make money on a trade like that until I add to my winner, right? So I mean, if I go 100, 98, 96, and that trade goes up to 105, I don't make a lot of money on that trade. Where I make the money is that I stack orders and I go from 3 entries to 10 entries. And all of a sudden I close out 13 winners at a profit target. That's where I can turn, like $1,000 drawdown into a $3,000 to $5,000 winner, right? So I patiently scale myself in, manage the drawdown, add to my winners, and my reward to risk is way, way bigger. Yeah. But yeah, a lot of patience required. But I've been doing it for a long time, man. That's just been the easiest way for me to be successful, where I don't have to be crazy time sensitive. The leverage that I deploy is very minimal. So, I mean, when I trade Forex, I barely use leverage, honestly. I usually have about 75% margin in my accounts at all times and just wait for good opportunities. If I really like something, I might throw in, I might go 50% margin being used. Yep. So, yep. That's how we do it, though. All right. Oh, this is good stuff. All right. Yep. That's up $290, almost $300. If I want to take the profit the last 3 minutes, hopefully we stay there. Not bad, not bad. Right around that 65 point. Let's go 65. This is pretty good. Okay. All right, here's the deal, everybody. I do have a webinar at 4 p.m. It's probably been posted in my Telegram channel. If anybody would like to join at 4 p.m., you're all welcome. Here is the link right here. That's a 4 p.m. webinar. This is going to be part of my Newsbreaker service. And I think I took 8 trades today that are valid and ready. So, I mean, if you obviously we're going into the session at closing bell, so there's no trades to place, but you can take a look at those tomorrow, and we'll be watching those closely. Okay. So I'm going to let you go. Let me count the newsbreakers for today. So we've got 1, 2, 3, 4, 5, 6, 7, 8, 9. I've got 9 trades running. All good. Let's take it. Let's do it. Cool. All right. Thanks, everybody. Have a good day. I'll be back tomorrow for final hour, and I will see you hopefully in a minute for the webinar. All right. See you. Bye.